Hello, I am Ofer Druker, Chief Executive Officer of Taptica International Limited. I was appointed CEO of the group earlier this month following completion of the Taptica merger with RhythmOne. Previously, I was Executive Chairman of Tremor Video DSP, Taptica Brands Advertising Division. I am delighted to be able to provide an update on our businesses post-completion of the merger with RhythmOne. But first, to give you an idea of the scale of Taptica pre-merger, let's turn to the next slide. Taptica is a highly cash-generative business, and in the year ended 2018, Taptica as a standalone generated revenues of $276.9 million, adjusted EBITDA of $44.1 million, which was significantly ahead of the expectations that were set at the outset of the year. Achieved gross profit of $111.4 million, with a net cash inflow of $37.5 million. The group also closed the year with $54.4 million in cash, a very strong performance indeed. Before the merger with RhythmOne, Taptica has approximately 1,300 international clients, some of which are world-leading brands, and was successful in 2018 in continuing to diversify its customer base. Pre-merger, Taptica operated in over 70 countries, employing around 400 employees. As you can see, Taptica has had a strong track record of growth, consistently delivering profit upgrades year on year. Since its IPO in 2014, the company has grown organically whilst making select acquisitions in order to both widen its customer offering whilst broadening its international reach. In 2015, Taptica acquired Area 1, and more recently, in 2017, the Tremor Video and Ad Innovation businesses. The acquisition of Tremor was an important and very strategic deal for the group, giving Taptica a foothold in the brand advertising space. The business has continued to perform strongly under Taptica ownership following its integration, most notably with a significant improvements in margin achieved in the year ended 2018 when compared to legacy DSP performance. The acquisition of Ad Innovation enabled the group to increase its penetration in the Asia-Pacific region, with Taptica now operating through its Ad Innovation subsidiary in Japan. Significant strides have been made in developing its business since its acquisition, including the adoption of new corporate structure and Ad Innovation benefiting from the media buying activities within Taptica. Taptica has compelling credentials in growing both organically and through acquisition. Our management team, integration expertise, sits at the heart of our success, delivering both synergy and cost-saving benefits to the group. Which brings me to our recent merger with RhythmOne. RhythmOne is a business that Taptica has been in discussion with for some time, and we are delighted to finally have a chance to integrate these businesses. As you can see from the chart, it's too been busy acquiring assets and broadening its market presence. As we reported at the time of completion of the merger, RhythmOne trading in the year ending March 2019 was below expectation. However, ahead of completion of the merger, Taptica's management had taken a conservative approach in regard to this period of trading for RhythmOne, and we remain very confident in the rationale behind this transaction and the future of the combined group. Now, if we turn to look at the enlarged group, the combination of Taptica and RhythmOne businesses has created one of the leading digital video advertising companies globally, with a significant presence in the US. This is a very beneficial given to the scale required to successfully compete in this market. The enlarged group has presence in the US, in Canada, Asia Pacific, Europe, India, and Latin America. The group now has approximately 900 employees globally. Following the addition of RhythmOne asset, Taptica operates three core revenue streams. The first is Tremor Video, which is our brand advertising center operation focused on audience targeting and connected TV, or CTV. The second is the Taptica mobile performance-based business, which focused on optimizing CPI campaigns for our clients. Finally, Our third revenue stream comes from the newly created media division based on the RhythmOne exchange, along with other assets, offering an innovation platform focused on media that enhance the reach for advertisers. The central benefit of the merger was to create a business of significant scale capable of competing with the digital advertising giant, such as Facebook and Google in the US. As already outlined, the combined entity has achieved this scale as well as bringing together impressive capabilities in a full end-to-end suite of products. The addition of the scale and capabilities to the group provide a significant platform from which to generate further growth for Taptica. There are potential opportunities for both cross-sell and achieve cost-saving synergies in the near and the medium term and generate value for the shareholders of the enlarged group. Specifically, if we turn to the following slide, we can see how the combined group fits together within the three clear revenue streams. Whilst it's too early to define the quantum in terms of saving, we believe we have the experience to maximize this significant opportunity in the medium term. As recently announced, we are proposing to change our group name from Taptica International Limited to Tremor International Limited. We believe there is a significant brand value within Tremor, especially in the US and in the video advertising space, which is a very key market for the enlarged group. A special resolution to approve the company name change is being proposed at the company's AGM. Under the Tremor International umbrella, as you can see, it's anticipated that the group will operate with three core revenue streams: Tremor Video DSP, a media division, and a performance division, retaining the original Taptica branding. However, these brand names are still possibly subject to change. RhythmOne's Yumi business will sit within Tremor Video DSP, as will RadiumOne, and Perk Apps and Perk Media within the Taptica performance-based marketing division. We believe this simple structure will allow our team to fully leverage their skills and capabilities. This chart simply illustrates our vision for the business. Video is key, growing medium for the advertising industry, and we have firmly placed ourselves at the heart of the innovation within it. The RhythmOne acquisitions giving us extended reach into CTV. Trevor Video are expert at curating unique audiences from exclusive data partners, helping brands reach more unique and targeted audiences than ever before. The combined expertise strategically position Taptica to leverage this growth in areas and secure our leadership position in the market. One of the things that differentiate our business is the truly blue-chip nature of our client base, as well as the strategic partnership that we have in place across the businesses. We have a very diverse international client base spanning a wide range of sectors across our core operating divisions, with clients including Starbucks, MasterCard, Walt Disney, and Netflix as examples. Additionally, our data partners and CTV partners ensure we are able to achieve unrivaled audience targeting. The expected growth within global digital video underpin the rationale for the merger and provide a significant opportunity for the enlarged group to capitalize on. This is a dynamic space, not to mention the fact that the global digital video ad spend is expected to grow from $48.17 billion in 2019 to $93.74 billion in 2023. Specifically, over-the-top or OTT content, which is content that is streamed through the internet onto a device, and CTV users, which are individuals who use a device through which OTT content can be consumed, i.e. laptop, mobile device, tablet, or TV, are expected to grow rapidly. All major OTT providers, Amazon, Netflix, Hulu, and YouTube, are expected to grow their user base through 2021, and CTV devices, for example, Smart TV, Roku, Comcast, connected game console, and etc., are expected to experience increase in usage through 2021. We are now going to take a look at the individual divisions and what we believe are their key growth driver going forward. The brand advertising division is a key part of the ongoing growth of Taptica. The main component of this division are Tremor Video DSP and RhythmOne Yumi. With this segment benefit from an augmented sales function following completion of the merger. It is unique in its ability to connect the big screen to the small screen, reaching consumer however and whenever they engage. This is achieved by partnering with a number of established and well-trusted data providers. Management believe that the key growth driver for Tremor Video will be the expansion of its presence in the US, which is already a core market, but much opportunity still exists. The ongoing proliferation of connected TV and our ability to provide a product that connects audiences and CTV. The development of strong self-service offering and the potential to expand internationally beyond the US. Moving on to Media Division. This division is centered on RhythmOne Exchange, with its key offering including publisher-focused solution and influencer marketing. The central growth engines for the Media Division going forward are to expand its resources by recruiting publishers, incorporate data-driven segments knowledge, connect Tremor Video to the exchange, which was a key synergetic benefit behind the rationale of the merger, extend self-service capabilities, and expand international presence where significant opportunity exists. Finally, we will look at the performance-based marketing revenue stream. The basis of this division is the legacy Taptica business combined with Perk Apps, which is focused on mobile rewards, and Perk Media, which is a content business. In 2018, revenue decreased in the performance marketing segment of the standalone Taptica business, with a significant part of this decline as a result of the anticipated reduction in legacy revenues in display and video. However, we made significant progress in expanding internationally and adding to our blue-chip client base. As previously flagged, pre-merger, the performance marketing division is experiencing some of the headwinds affecting the industry. However, some of the key rationale behind the merger centered on mitigating this. The key strategic driver for this division going forwards are focused on adding programmatic buying capability, strengthening the sales team in order to further develop our performance offering, expanding into additional verticals with Perk Media, and developing a content-focused businesses. Our integration plan for RhythmOne is clear and straightforward. It's focused on combining two highly complementary businesses and enable us to further strengthen our market position and improve customer penetration. We will be seeking cost-saving synergies, which includes merging a number of operating entities, consolidating our office location, and streamlining a number of product lines. Running alongside this initiative will be executing on our growth drivers, which I have already outlined in respect to each division. This includes matching supply to demand and capitalizing on the significant opportunity that exists in the US. Overall, the key for us is to divert unnecessary or duplicated costs to support our ongoing growth. In summary, we believe post-completion of the merger that the business is very well placed within an exciting and dynamic sector. We have a clear platform from which to drive future growth centered on growing the bottom line, continuing to invest in our proposition, executing on existing growth engines. We have a strong and experienced management team in place who are focused on integration and delivering synergies. We remain committed to driving shareholder value, and the post-completion of the merger commenced a $15 million share buyback in order to support the ongoing share price performance of the group. Thank you for watching and listening to our webcast, and we look forward to providing further updates in due course.